Welcome, everyone. We're going to give people a few minutes to join, and then we'll be starting momentarily. Welcome, Logic subscribers and new audience members. These events are usually subscriber exclusive, but today we've opened it up to everyone. We've opened up this special event to everyone. If you're not yet a subscriber, what are you waiting for? Join us today at thelogic.co. I'm April Fong, executive editor of The Logic, and we're here today to talk about Donald Trump's tariff threat. He said earlier this week that he'll hit Canada and Mexico with 25% tariffs on all imports unless both countries deal with border security issues. 25% is a big number, and it will no doubt have far-reaching effects on the global trade and the economy. That leaves us with some critical questions to tackle in our special event today. What would 25% tariffs mean for Canada? What does it mean for our economy, the markets, and our key industries? And what can Canada's governments do to respond to this threat from its biggest trading partner? I want to encourage you to ask questions throughout our conversation today. You can use the Q&A function at the bottom of the screen. And don't wait until the end of the event. We want to hear from you throughout the conversation, and this is your chance to engage with our newsroom. Our Logic team of journalists have been working hard to help you make sense of the latest news, and I'm delighted to introduce some of them today here. We have with us Anita Balakrishnan, Catherine McIntyre, and David Reevely. Thanks so much for joining me today. Let's jump right in. Catherine, investors didn't appear to hit the panic button yesterday. The TSX Composite was virtually unchanged at the end of the day after Trump announced that he intended to impose 25% tariffs on Canada and Mexico. What do you think investors think about this? Do they believe it's actually going to happen?
Yeah, so I was initially pretty shocked to see that the market reaction was pretty muted to what seemed like objectively bad news for the Canadian economy. Um, so talking to portfolio managers and investors and economists yesterday, they gave me a few explanations for why the market wasn't freaking out. And one of them, as you alluded to, April, was that investors may take this as Trump simply posturing here. So this is a threat that he may not follow through on, and they're not going to make any rash decisions based on a policy that may never actually come into effect. Another reason could be that, whether or not these tariffs do come into play here, without more details on what exactly they will look like, it's just too hard to know what the impact on businesses and investors will be. So questions a lot of people are asking is, will there be exemptions for industries like oil and gas, for example, or auto manufacturing? At this point, Trump has said no, but we don't know what the end result here is going to look like. So, like you said, investors are not panic trading right now. I will say, though, we don't actually know what Trump will do here, and we don't know what Canada will do to deal with this threat. So, to borrow a line from our colleague Kevin Carmichael, investors and business leaders, they're not taking this threat literally, but they are taking it seriously. And I'm sure we'll dig into like what exactly that might look like. But yeah, why don't I just pause there and let my other colleagues speak?
Um, you mentioned how industries are preparing for that. And Anita, you reported on some of the sectors that could be expected to be hit most by these proposed tariffs. which Canadian industries stand to be the biggest losers, in your opinion?
Yeah, as jumping off of what Catherine said, I think from the auto industry perspective, these are folks that were already preparing to negotiate with Team Trump when the USMCA tax agreement comes up in 2026. So they're kind of viewing this like you would view an MLS listing for a house in Toronto. This is just the opening offer, not the final offer. But certainly the auto industry had been expecting, even with the 10% tariffs that were promised during the election campaign, that would add a lot of cost to already expensive vehicles. Obviously, the oil and gas industry is our biggest export, and there are also some more niche industries, but very interesting industries to watch, like the fertilizer industry, nickel and cobalt, where Canada is a very big and strong player, more so than the US. So those are, I think, were some of the areas that I'm watching right now.
David, how might this actually work? How likely is it to become a reality?
That's the trillion-dollar question, and it's entirely possible that even Donald Trump doesn't really know. I think the reaction in Ottawa has been much like the reaction that Catherine described with investors. Sort of a general expectation that this isn't going to happen, but it is not clear exactly what the path is to keeping it from happening. It's kind of like when you have a labor negotiation that's going down to the deadline at midnight for a strike or a lockout. It probably won't actually happen, except that sometimes it does. And when it does, there's a lot of pain. And it would be foolish for a government not to prepare for it and try to avert it. But it is, I mean, Trump's stated demand is to stop fentanyl and illegal migrants from entering the country. But as our colleagues M.A. Look and Martin Patrick reported, the numbers from Canada on those two fronts are really, really small. So the amount of effort that it would take to stop them, the amount of effort that it would take to stop them in the next 2 months would be enormous. So then the question is, what is this really about? And it's not clear what this is really about, and if it's not those two things. So what the government does in response, nobody's quite sure.
Yes, so the reporting that you were referring to from May and our colleague Martin noted how there's 21,000 pounds of fentanyl at the Mexican border compared to just 43 pounds at the Canadian border. Those are some pretty stark numbers. Catherine, you spoke with, as you noted, you spoke with portfolio managers and economists yesterday for their reaction. Where should people be putting their money right now?
I hesitate to give anyone investing advice. But yeah, as I said, although the stock market isn't freaking out, asset managers are definitely looking at their portfolios and reevaluating things. And it's like, anytime there's uncertainty in the market, they're looking at what are my strongest assets, what has recurring revenue, which assets aren't dependent on discretionary spending, what companies have operations in the States already and can avoid these tariffs. So these are going to be the assets that investors hold on to during this time, I think, without getting too specific.
Well, some interesting advice there. So we're going to take a question from the audience from Anna Yimwo. Does this action by Trump not contradict the USMCA trade agreement established between these countries? Anita, what's your take on that?
Yeah, others may want to weigh in, but talking to just a couple lawyers over the past 24 hours about this topic, like previously to this current debate, even the World Trade Organization has been kind of referred to as teetering on the abyss of irrelevance. So there's been sort of a pileup in general over the past few years of trade disputes, of countries not really honoring the WTO's rulings on trade disputes. They don't have very many powers other than to authorize like a retaliatory action, but they can't necessarily stop the US from violating the USMCA. So we could definitely see a lot of legal maneuvering going forward over the coming months and years ahead of those negotiations. But that's what I've heard so far.
If I can jump in on that too. I think the answer is it clearly would violate the USMCA, although it kind of depends on exactly what mechanism Trump would use. He's got several tariff tools that he could apply, and until he does it, we won't necessarily know which one it is. Under USMCA, there are dispute resolution panels, so sort of arbitrations that you can go to when the member countries have disagreements. The trouble is that the treaty is set up basically for countries that want to have free trade with each other, but sometimes disagree on the details. And if you have a member country, particularly the biggest one, that is actively seeking to undermine free trade, then the system is not well designed for dealing with that. So we could launch a dispute resolution process, and Mexico could do the same thing, and it would probably take years to sort out, possibly, conceivably, until the next administration in the States. So it's a mechanism that's there, but it's not likely to be super effective for our purposes.
Really interesting stuff. Okay, we'll take another question from Mark, which I think a lot of audience members will be very interested on the answer about. Mark Huxley asks, many of my clients have put their business development plans on hold until Trump actually becomes president. Does the panel believe Canadian businesses should push to get their goods into the US before Trump is inaugurated, or continue as normal and wait for the proposed tariffs become clear? We've been talking a lot about whether or not this can become reality. Catherine, what's your take on that? What should businesses be? How should businesses be preparing?
Yeah, this is something I've been hearing from folks a lot, is that we probably will see a surge in exports from Canada into the US over the next 2 months. And that's something that people are not going to wait and see and take the chance on whether or not these taxes come into effect. It's in US businesses' interest to try to get as much product from Canada as they can without having to pay this additional tariff. So that's something we likely will see. Another thing I've been hearing is that, and this could be a challenge for Canada, is that companies that don't have Canadian companies that don't have operations in the States may just go ahead and set up shop over there to avoid the tariff. And that's also kind of whether or not they come into effect this time around. Companies just don't want to be living in fear that this could happen at some point over the next 4 years.
Good points there. Anita, let's turn to the auto sector. This is a sector that could be hit hard as well. Linamar's chair, Linamar is a Canadian auto parts supplier. Their chair, Linda Hassenfratz, said that auto parts go back and forth about 7 times before making it into the final product. What could the tariffs mean for auto manufacturing? Should Canadian consumers be prepared to be paying more for their cars? What impact do you think this might have?
Yeah, so as we talked about, cars are already very expensive, and Linda Hassenfratz did predict that it would add more cost. If you look at like the US highway safety regulators, who are kind of like the Transport Canada equivalent, they don't even right now distinguish between US and Canadian content on their standardized records. They'll say, this whatever Volvo was assembled in Sweden and has this much parts from Japan and this much parts from China, and then it just has US and Canada content as one group. So they have been treated as like equivalent in many ways up until now. And we saw with the semiconductor shortage a couple of years ago that even if a vehicle is missing one part, that part can be the difference between it being on the road and not being on the road. So these are very complex supply chains. An analyst once told me there are like 10 to the 18th power different permutations of a car model when you take into account all the different trims and options for that each manufacturer has access to. So they are not going to be able to sub one thing in for another overnight. It's going to be a very complex process for them if they try to work around the tariffs. So in some cases, it may make more sense to just pay more, and then we all pay more.
We all pay more. David, what do you think this could mean? Economists are already sounding the alarm on how this could reignite inflation, and central bankers have been working quite hard to try to tame inflation. So, what could this mean for the price of goods?
I mean, on the face of it, they would increase the price of goods in the United States by something like 25%. And in practice, that would actually be divided a little bit amongst producers and consumers and so on. It depends on the good, but basically the effect is a 25% sales tax. And if you are concerned about inflation, raising the prices of something by 25% is not a great idea. The goal would be presumably to increase production of this stuff in the United States. And so the actual effect on consumers there would be somewhat less. They get a US made product for less than 25% more, but that would take some time. There'd be friction, and the prices would still be higher on the expectation, on the assumption that the stuff is currently made in places where it makes economic sense. That hurts production in Canada or Mexico. And so maybe costs would go down here, but that's kind of a second order effect. And it would not be the case. It's not something I would count on. And it would not be the case if we put on retaliatory tariffs, which the Canadian government has not said it would do, but Chrystia Freeland kind of pointed out that that was what Canada did in response to steel and aluminum tariffs the last time Trump was president. So you increase the prices of one input, then that leads to increasing prices on the stuff that is made with that input and on down the line. So tariffs are inherently extremely inflationary.
You noted, Freeland's comments on the first Trump presidency and some of the tariffs tit for tat that happened there. What did we learn, you think, from the first Trump presidency that could be applied to what's happening with tariffs now, or could happen after January?
Yeah, I mean, it's a good question. And I think something everybody is wondering about when it comes to the next Trump presidency is just how much like the first one it's going to be. His cabinet picks generally are very different. I think, as he started rolling them out after the 2016 election, there was some relief that he'd named largely a bunch of adults. He's named some adults, some serious people to cabinet posts, and maybe a little more on the economic side than the justice and foreign policy side. But this looks like a somewhat more erratic administration it's not even the early going, in the pre-going than the last one did. So it's hard to say how effective previous tactics might be against the next administration. And what we saw was that the tit for tat retaliatory tariffs worked, but they took a long time. After the steel and aluminum tariffs were put on, it was almost exactly a year before they were lifted again. And it wasn't just the tariffs that Canada put on some US goods in response. There were some policy changes and whatnot to satisfy Trump. So it arguably worked. Some might take issue with that. If it did work, it didn't work fast.
Some lessons there to keep an eye on. Catherine, you look like you want to jump right in.
Yeah, I was just going to add on to David's comments about the economic impacts of these tariffs. The Canadian Chamber of Commerce looked at this when Trump was initially suggesting a 10% tariff on goods from Canada, and they found that the per person hit to individual Canadians would be upwards of $1,100 a year, and that was with a 10% tariff. So multiply that by 2.5, and that's a pretty big hit. And they found, on both sides of the border, that it would be roughly the same.
That's a big hit to a lot of people who are already feeling the pinch of inflation and the pressures of the uncertain economy. Let's take another audience question. This one from Paul Donald. I'm just scrolling up. I love all of these questions. Are tariffs only on physical goods, or could they impact SaaS companies? Let's talk little bit about the nuts and bolts of how this would work. Catherine, I know this is something that you're digging into.
Yeah, so again, like there hasn't been any indication that there'd be exemptions with these tariffs, so presumably it would include software as well. Right now, under USMCA, software sales are tariff-free between Canada and the US and Mexico. But again, that would likely change here as well. So of course, that would make it harder for Canadian software companies to sell into the US. And it would also make these companies less competitive and potentially less attractive to US venture capital investors and perhaps also Canadian VCs too.
David, what are your thoughts on that?
This is, I agree with everything Catherine said. Although if you're talking about selling services, that might be a little bit different. If you're selling software, that's different from selling a cloud service or something along those lines. This is one of those things where it depends what mechanism he uses. In general, tariffs are applied to goods, and those goods can be virtual, but they're like a thing. One of the tools that's available to him, to Trump, and it's the biggest and broadest one, is the same sort of tool that was used against Russia, for example, to tariff stuff quickly. It's not actually an economic tool; it's a national security tool that's given to the president, and it has a lot more flexibility and a lot more power attached to it. And Trump. It's never been used in this way to tariff all goods from a country, but in theory, Trump could use it that way, and that gives him an enormous sweep. So technically, those would be trade sanctions rather than a tariff, but the effect would be exactly the same as a tariff.
Speaking of, what tools are at their disposal, let's talk about the response that business is expecting and industries are expecting. Anita, the CEO of the Canadian Association of Petroleum Producers, had some strong words on how these tariffs could hurt Canada's energy industry and also American consumers. Can you tell us about that? And what is CAP calling for from our domestic policymakers?
Yeah, so CAP was kind of obviously representing their members and feeling that we were focused too much on kind of infighting over domestic policy that penalized the oil and gas industry rather than thinking about these big picture kinds of shocks to the system. And yeah, there is, I think oil prices are one of the top kind of things that are top of mind for people. Oil prices going up means anything that gets trucked anywhere goes up. And Canada does have some market power in some areas of the oil and gas industry. Obviously, a car can be made anywhere. Oil is found in the ground. So, Canada does have some areas like in heavy oil where the alternative would be to go to someone like OPEC, and that's not a popular option either politically. So I think there's some hope that the Trump administration would be sympathetic to that, maybe more so than other industries. But yeah, definitely some strong words out of CAP yesterday.
Let's take another audience question. This one from Navi Suresh. What tools do the different levels of government have in this negotiation? David, what are your thoughts on that? What are we expecting, for example, from the meeting that's happening this afternoon with the Prime Minister and the premiers?
I think so there's a First Minister's meeting called under some duress at the request of the premiers. Doug Ford of Ontario is currently the chair of the Premiers' Council. He asked for a meeting on Monday morning and then did not get any sort of quick response. And then Trump did his post that evening. And then the next morning, Trudeau said, yeah, I'll meet with the premiers. I think what might hope for is some kind of a coherent plan to come out of it between the prime minister and the premiers, because we have a whole lot of leaders with extremely divergent views. You might say Danielle Smith at one end, and her province, Alberta, exports certain things that the Americans really need. And you've got the prime minister, and he and Smith are opponents, and he and Ford kind of get along when they need to, but not really. In Newfoundland, there's a Liberal premier and Fury. They get along okay, he and the prime minister. And so they all have these different forces and these different industries that they will all be seeking to try to defend. And so whether they can agree on, first of all, how seriously to take this threat, and whether the right response is to fight back hard, or to give a little bit and try to negotiate, or to do what Trump wants so he doesn't hurt us anymore. Like, these are three arguably valid approaches, and I don't think it's really obvious which one is right. So layer that on top of all of the different political forces that are at work here, and different regional interests, and it's going to be really difficult to get people on the same page. We can hope that the prime minister and the 13 premiers, because the territories are in on it too, will at least find some common ground that they can agree on. As for what tools are available, it really depends what we're trying to do. Are we as a country, do we decide to fight? Do we decide to make some concessions? Do we decide to do what Trump wants? Either because he's very powerful and we don't want him to kick us again, or because it's the right thing to do. Either way, all those different things fall in all into different spheres of jurisdiction. So question one is, what are we trying to do? And then the question is, how do we do it? And then the third question is, who does it? So we're several layers away from any kind of answer to that question, I think.
There's lots of layers in the Team Canada approach, so to speak, right? This is maybe another opportunity for an audience question. This one from Michaela Brack. What are the panelists' thoughts on Canada staying in a renegotiated USMCA versus individual provinces negotiating deals with individual states? What are your thoughts on that, David?
Well, trade is inherently an international and inter-country activity. So individual provinces can't really negotiate with individual states. That's just sort of not how it works. I think a live question is whether a renegotiated USMCA is what's in the cards versus bilateral deals between Canada and the United States, and Canada and Mexico, and the United States and Mexico. So 3 deals that way instead of 1. We've seen the premiers argue unanimously that Canada should go it alone with the United States and work separately with Mexico. Trudeau has kind of been cool to the idea, but certainly has not foreclosed it entirely. What's the issue here is Chinese investment in Mexico, which neither Canada nor the United States is thrilled about. I think part of what's at work there is that although all 3 countries are in the same deal, Canada-Mexico trade is not huge, and has not. I mean, it's grown somewhat, but from under NAFTA and then USMCA, but from a really, really low base. So if Canada were going to pick between trade with the United States and trade with Mexico, as a country, we would carve Mexico off, I think, without a second thought. So that's another tactical question: is, do we really want to stick with the 3-way deal? Is Canada plus Mexico a better negotiator versus the United States? Or do we do better if we turn on Mexico? And that's a question that's certainly above my pay grade.
All good questions, and lots of things to watch out for there. What can Canada do? What are some of the easiest concessions that are at Canada's disposal? Catherine, what do you think about that?
Well, speaking to some economists yesterday, a few things that they pointed out as possible concessions Canada could offer up. One of them is the digital services tax that recently came into effect. So this is a 3% levy, which mostly targets big US tech companies. Changes to our supply management rules around things like dairy to allow more US participation in our market, making critical minerals and energy more accessible to the states, And then a big one is contributing more money to NATO defense spending, which is something that has been a huge issue for Trump. So, you know, as we've kind of mentioned, this is if Canada is looking at this as the 25% tariff being a bargaining chip, coming in with kind of like an unreasonable ask, and these potential concessions are things that Canada can use to negotiate with.
David, what are your, Anita, you want to jump in there? I see your unmute button going off.
Yeah, so I guess on the other side of things, in addition to the industries we've talked about, like the auto industry, and oil, there are some other areas where the alternative to Canadian supply would be less politically favorable. So if you're thinking about things like potash and uranium that mostly come from Russia, if not from Canada, cobalt, the US has used its own defense spending money to fund Canadian cobalt mines. So if they were to then charge themselves again when they brought it back, that would be like just setting money on fire. So there are hopefully some bargaining chips on the other side of the equation of, you know, areas where it would make very little sense for them to buy these specific goods elsewhere. And so those could be good bargaining tools.
In our reporting, we had the Canadian Chamber of Commerce President Candice Lang saying it's not the time to be nice anymore. And so I'd like to talk about Mexico's response versus Canada's response so far to Trump's tariff threat. David, what are your thoughts on that? Is it time to talk tough and not play nice? What's our approach here?
Yeah, I mean, that's one of the strategic questions that the politicians, I think, are going to have to sort out. But Mexico's response, as expressed by Claudia Sheinbaum, has been fierce. And she sent Trump a long letter and read big, long chunks of it in a news conference yesterday. She says any U.S. tariffs will be met with a tit-for-tat Mexican response until we have destroyed our shared enterprises. And she points to auto manufacturing, including the big three, and points out that they've been in Mexico in some cases for 80 years. But she is saying, yeah, if you want to tear them apart, we will tear them apart. She also points out, though, that migration through Mexico to the United States is way down. Mexican police and military have seized very large amounts of drugs. And she points out that what's going on in Mexico, particularly when it comes to drugs, is a result of demand from the United States. That all this, this fentanyl is not going into the US on its own. It's going in to meet demand from American drug users. And in exchange, Mexico is getting huge quantities of American guns and violence over feeding the American drug trade. So there's some stuff that the United States probably ought to do if it wants to be a better partner here. But Mexico is also the country with a much bigger, as from the US perspective, the much bigger migration and drug problem. So Mexico knows what it wants to do. Canada is still figuring that out. I think there's a different political dynamic there as well. Sheinbaum has just won an election, and she has a fair bit of political capital. And Trudeau, if there were an election tomorrow, the polls say that he would be out. And so he doesn't have a whole lot of political capital. This might be the kind of moment the Liberals have been hoping for, a chance for him to be Captain Canada and to pull people together and show leadership and all that. But he's got to get some wins, and he's got to get some wins without a whole lot of a foundation to stand on at the beginning. So he's got to suss out, I think, what people want and then figure out a way to deliver it rather than charging into battle and knowing that there are going to be people behind him.
So do you think that's the reason why it's less clear what Canada's strategy is then?
I think that's definitely part of it. And one reason to have a meeting with the premiers is to try to, get everyone around the same virtual table and figure out where there is common ground, because Trudeau doesn't have the political capital to do stuff and say, okay, you guys are coming with me, as he sort of did at the beginning of the COVID pandemic, for example. He'd just won re-election a few months before with a minority instead of a majority. It wasn't as strong, but he had some capital, and he just doesn't have it this time. So he's got to figure out where people want to go and then get to the head of the parade if he wants to make it work.
Get to the head of the parade. That's an interesting point. Let's take another question from the audience. This one from Axel Meisen. Canada is a major exporter of electricity, principally hydroelectricity to the US. How should we deal with electricity exports to the United States? How is this going to impact, how would the proposed tariffs impact this? Anita, maybe this is a question for you. What are your thoughts on that?
I think that a lot of the utilities have bigger fish to fry even than the tariffs when it comes to the long-term future of energy exports or electricity exports. We just saw the results from Hydro-Quebec exports coming way down and overall profits, I think, coming way down as well. And we know that Trump wants to have more access to that power. But we also have our own projections that we are going to need a lot more of our own power for things like AI and heat pumps. So yeah, I think there's a lot of structural work that needs to be done even beyond the day-to-day negotiations over USMCA. I don't know if anyone else has anything to add on that one.
Yeah, we do export power, or several provinces do export power, but not loads of it, and usually at quite low prices at off-peak times. So I think they're arguably, if you take Trump at his word and he just wants to tariff literally everything entering the United States from Canada, then he would apply tariffs to energy. But I don't think we're talking about an enormous amount of money or an enormous amount of power.
Natural gas, though, might be a big
Yeah.
more of a big issue.
Yeah, sorry, I say energy, I mean electricity, as opposed to natural gas or oil or anything like that.
Maybe relative or related to this, and we were talking about, the provinces and the feds working together. So maybe we turn to the US government structure as well. How much influence, Kate, this is a question from Kate Skipton. How much influence do you think individual US states will have on Trump's actions in terms of whether to follow through on tariffs? Do you think that they'll have a lot of influence, David? What might be a concern from the state's perspective?
Canada is counting on it being a lot. That has really been the broader Team Canada strategy. It was last time, and it is this time, is reach out to governors, reach out to state legislators, reach out to senators and congressmen and congresswomen and local business leaders. Doug Ford, for example, he doesn't say anything about trade with the United States without pointing out that Canada is a huge destination for products from American industry from multiple states. I off the top of my head, I think it's 28 states send more goods to Canada. We're either their first or second biggest trading partner. And certainly if Canada puts tariffs on American exports, and if America puts tariffs on Canadian imports, in many cases that's stuff that supplies American industry, it's going to be a really, really big local problem. And particularly a big problem in industrial states, which in a lot of cases are swing states that Trump won them all just a few weeks ago. But if the Republicans need to hold on to them if they're going to keep power beyond 2 years from now. The question is, how much does Donald Trump personally care about that stuff? And I would say that Trump can be erratic. You'd think he would. You'd think the average American president would care a lot about that stuff, but Trump is not the average American president.
That's right. So I thought we'd wrap up with some questions on or parts of the conversation where we could look ahead. Anita, how do you think this could impact the burgeoning EV sector in Canada if it does become reality, these 25% tariffs?
The industry is in a very tricky situation because if you go back to 2019, at that point when the Oshawa GM plant was closing, it really seemed like it was very difficult for Canada to compete with Mexico and the southern United States on manufacturing prices. The margins were just quite thin already. So 25% could make a very big impact on those plants that are maybe not large. A big sort of trend that you've seen over the past few years when new critical mineral deals or manufacturing deals have been announced is that they are IRA compliant, which has a fancy way of saying they qualify for a discount in the US. And now we have the opposite situation of that. So it does create a lot of uncertainty, for that, and also for suppliers who have been told over many, many years that they need to set up shop in Mexico because it is cheaper and they need to be able to compete with, China or other jurisdictions outside North America. And now they're, being punished for those investments. So, it will be a very difficult time for people that work in those industries watching this play out. And hopefully we can give them some certainty soon.
Okay, so lots more complexity and uncertainty. Catherine, how do you think businesses and investors might be reacting between now and January 20th, Inauguration Day? What are you watching out for?
Yeah, I mean, the overall message that I'm hearing is that, this will certainly be disruptive, whatever the final outcome is. There will be a lot of pain for Canadians and for businesses here, but there may also be some silver linings. First of all, the challenges I'm told is that, we've touched on some of them, but we'll likely see a decline in business investment overall, which has already been low for the past decade in Canada. Domestic investors and foreign investors are likely will just be less interested in Canadian assets if their buyers in the US have to pay a premium for them.
Yeah.
The caveat there is that the loonie is also expected to stay low. So it's been declining for a little bit. It hit a 4-year low yesterday. And the plus side to this is that it gives US buyers more spending power in Canada. So although they have to pay a 25% tax on goods from Canada, those goods before tax are actually cheaper. So a lot of uncertainty around how this could play out, but the message that I'm hearing over and over is it'll be disruptive either way.
Okay, it'll be disruptive, could dampen investment here, but watch out for that lower loonie. David, what are you watching out for next in terms of how the negotiations may be going?
And, First Minister's meeting in 2 hours and 17 minutes officially. Although Trudeau's always late for stuff, so probably won't kick off quite on time. The same stuff I was talking about earlier is whether they can, the political leaders can agree on, if not a strategy, at least an approach. Is our response to fight? Is our response to negotiate? If so, what are we trying to achieve in those negotiations? What do we think Trump wants? How do we find out? It's a poser for sure. And so just figuring out, even determining what page people should be trying to get on is really hard, let alone actually getting them there. And you can well imagine some skillful people in the Trump administration taking advantage of it. We will hypothetically take tariffs off, autos in exchange for you doing away with supply management. Probably they don't care that much about supply management, but a scenario like that pits Quebec against Ontario and a few other parts of the country. We'll take tariffs off oil if you do away with subsidy programs for EVs that the Trump administration doesn't like. Absolutely, they can pit region against region. So whether the politicians have it in them to decide on a strategy and follow it, that's a big question. And we had Peter Bethlenfalvy, Ontario's finance minister, in talking to us a couple of weeks ago, and we did some stories out of it. He said there's a great deal of coordination on outreach to the Americans. They have some experience doing this. Here they are in their first big test. So we'll see how that experience serves them.
It's a big test indeed, and we'll be watching all of it at The Logic. I want to thank you, Catherine, Anita, and David, for your smart analysis and insights on this incredibly important topic. There are some far-reaching consequences, and businesses and Canadians want to be prepared for this as much as they can be. So watch out for our continuing coverage of Trump's tariff threat and what it means for Canada. We'll have much more for you, for our readers. I want to thank the audience. Thank you for joining us and taking time out of the day to join us, and for all of your incredibly smart questions. We're excited to bring you more of these events, so watch out in your inboxes for some of those coming up. I'll just note a few of them here. On December 9th at noon Eastern Time, The Logic is hosting an event called Living Well, a holistic approach to national health. It'll be moderated by David here, and feature expert speakers across the physical, mental, and financial health industries. That'll be a really interesting one. On December 12th at noon Eastern Time, I'm delighted to announce a subscriber exclusive event with myself and The Logic's economics columnist and editor-at-large, Kevin Carmichael. We'll be looking back at the year, at 2024, and hoping to provide an outlook for the economy in the coming year. You won't want to miss this, and if you're not a subscriber already, you can do so today for access to that event. Stay tuned for the registration link. I want to thank you again. Thank you to the speakers. Thank you to the audience. Have a great day.